Okay, let's unpack this. We have a jam-packed source stack today. It really covers a week where geopolitics, presidential directives, and these massive corporate pivots have all just collided.
You really have. It's been an intensely volatile week.
So our mission today is really to take you through all that noise and get to the essential insights from, well, Washington, Silicon Valley, and the global markets.
And what our sources are showing is a global economy that's reacting, immediately to political intervention. From looming court deadlines on tariffs.
Worth hundreds of billions.
Exactly, to aggressive new state tax proposals and even renewed talk about acquiring an entire Arctic territory. I mean, if you want to know what's driving volatility, it's policy unpredictability.
And that volatility showed up right away in Asia, didn't it? Our initial snapshot shows most Asian markets fell.
Yeah, driven mostly by that uncertainty and, geopolitical tension. The Nikkei 225 dropped, 1.63%, and the Hang Seng Index was down about 1.59%.
And a lot of this was tied directly to specific U.S. policy comments, right?
Yeah.
Things affecting defense and the oil supply.
Oh, absolutely. We saw an immediate ripple effect in oil prices. For instance, President Trump's announcement that Venezuela's interim authorities would turn over, I think, up to 50 million barrels of crude.
50 million?
Yeah, 50 million barrels to the U.S. That caused an immediate overnight drop. Brent crude futures fell 0.51% to around $60, though U.S. WTI actually ticked up a bit.
A potential injection of 50 million barrels is just massive.
Yeah.
How quickly could something like that actually hit the market? And is there a risk as this is, just political leverage?
Oh, it is absolutely political leverage, but the market reacts as if it's already fact.
Right.
The mere threat of that supply injection is enough to spook traders worried about a global oversupply. It sort of creates a ceiling on prices until the reality on the ground changes.
Okay, so let's pivot from oil leverage to the defense sector.
Yeah.
Because we saw these really strange conflicting signals there.
The contrast was remarkable. U.S. defense stocks actually fell after the president said he will not permit them to issue dividends or stock buybacks until they fix his complaints on things like executive pay.
That's a direct threat to shareholders.
A huge one. But at the same time, European defense stocks, they rallied for a fifth straight day.
Why the split?
Because the long-term outlook completely trumped that short-term headache. The president also called for a 50% increase in U.S. military spending, targeting a $1.5 trillion budget by 2027.
$1.5 trillion.
So the global defense sector is just discounting the dividend threat and focusing entirely on that guaranteed future revenue. It's that simple. Future money outweighs present-day controls.
And speaking of geopolitical chess pieces, we have to talk about Greenland. The Greenland gambit is back on the table.
It is. Citing national security importance, to deter rivals like China and Russia in the Arctic. And this raises the incredible question of, what's it even worth?
It's a self-governing Danish territory, and Denmark has been very clear.
Emphatic. Not for sale. But the U.S. seems determined to at least explore the idea.
So what are analysts basing the valuation on? The numbers are all over the place, from billions to trillions.
Mm-hmm. Well, the low end, the hundreds of billions, that's purely strategic military value. Location, airspace control, deterrence.
Sure.
But the multi-trillion-dollar figures, that's all about natural resource potential. One study estimated known critical minerals and energy resources could be worth upwards of $4.4 trillion.
$4.4 trillion, just based on untapped reserves.
Exactly. And another metric just compared its real estate value to Iceland, which still puts it at nearly $2.8 trillion. The point is, just talking about it shows how important securing the Arctic has become.
Let's transition from international strategy to corporate strategy, starting with a huge and very costly pivot in the auto industry. General Motors is clearly resetting.
They absolutely are. GM is taking a massive hit, a $7.1 billion special charge for the fourth quarter of 2025. This isn't some minor adjustment.
Wow.
It reflects a serious realization that their whole electrification timeline was wildly optimistic.
And we can break down that $7.1 billion.
Right. We can. About $6 billion of it relates directly to changes and delays in their EV plans because consumer demand is just weakening. The adoption rate has slowed.
Especially since the federal tax credit ended.
Right. GM's strategy really relied on that demand staying high, so that's the domestic front. The other $1.1 billion is tied to restructuring in China, where the market is just intensely competitive now.
So it's a correction on two fronts?
Exactly. Slowing down the expensive EV transition at home and right-sizing its operations overseas. And it's not just them. Ford recorded similar write-downs. It's a broad market reset.
But this caution we see in manufacturing as being, completely ignored in the tech sector.
Oh, completely. It's explosive growth there. The Nasdaq gained 0.2%, and, Alphabet jumped 2.4%, letting its market cap surpass Apple's for the first time since 2019.
That's a huge psychological shift.
And we're seeing the AI race fuel global investment. Zippu, it's the first of China's AI tigers, had a really successful Hong Kong debut. It rose 15% after a $558 million IPO.
The capital flowing into AI is just staggering.
It is, and that acceleration immediately creates defensive needs. We saw a major cybersecurity acquisition. CrowdStrike is buying an identity management startup called SGNL for almost $740 million.
So why is identity management suddenly worth that kind of premium?
It's a direct result of AI-led cyber attacks. We now have documented proof. Anthropic published a report showing AI tools can generate these incredibly sophisticated, personalized attacks at scale.
And identity is the weak link.
It's the weakest link. Who has access? What rights they have? So CrowdStrike is trying to future-proof its Falcon platform against these new, smarter threats.
But this acceleration is also being mirrored by these escalating legal fights over who controls the technology, which takes us straight to Elon Musk versus OpenAI.
And that legal feud is now officially headed to trial. This is a foundational legal challenge for the whole AI industry.
So what's Musk's core argument?
His lawyers are arguing that OpenAI's leadership made knowingly false assurances about its original nonprofit mission when they pivoted to their current, super profitable Microsoft-backed structure.
So it's a battle over whether they kept their promise to build AI for humanity, not just for profit.
Pretty much. It's wild, isn't it? The founder is fighting the company's pivot to hyper-profitability. OpenAI's defense is just to call the suit baseless and part of a pattern of harassment.
This trial is going to be fascinating.
It's an unprecedented legal challenge. The courts will basically have to define the obligations of a company that started as a nonprofit and is now a global superpower.
Well, speaking of massive wealth and high-stakes legal challenges, we have to talk about California's controversial Billionaire Tax Act.
This is arguably the most aggressive domestic policy shift on the table. A one-time 5% tax on the total global wealth for California tax residents with a net worth over $1 billion.
The revenue would be immense, but the legal headache is already brewing. And the sources highlight the really aggressive part of this, the retroactive date.
Yes. They set the effective date back to January 1st, 2026. Because the plan was revealed so late last year, the state's 200 or so billionaires were left with, and I'm quoting, little time to legally establish residency somewhere else.
I could just hear the attorneys sharpening their pencils. What's the core legal challenge here?
It's all about due process. The argument is that creating a wholly new tax and applying it retroactively is likely unconstitutional. It doesn't give people fair notice to, adjust their affairs before the liability hits.
Yeah, we were already seeing the reactions. Peter Thiel established a presence in Miami.
Right.
While, interestingly, NVIDIA's CEO, Jensen Huang, said he's perfectly fine with it.
It forces this immediate multi-billion-dollar decision, doesn't it? Stay and fight or leave. Which kind of brings us to some investment lessons from the ultra-wealthy.
Right. When you look at how they succeed, what's the common thread we can all apply?
It's the long-term focus. They commit to investments, buying based on understanding the actual business, its revenue model, its management, not just day trading or trying to time the market.
And a big part of that is diversification, using broad market funds.
Correct. The bedrock of their public market exposure is often simple, low-cost index funds like the S&P 500. They use them because they average about 10% a year, and, they shield them from the single stock volatility that can wipe out other investors.
What about real estate? How do they get exposure without becoming, a massive landlord?
They use REITs. Real estate investment trusts. It's a way to get the stable income of real estate, historically 8 to 10%, without needing huge capital or dealing with property management. It's liquid and it's professionally managed.
Okay, shifting back to D.C., a massive legal decision is looming that could destabilize importing businesses everywhere. The Supreme Court's ruling on the Trump-era IEPA tariffs.
And that decision could drop as soon as this Friday. The financial stakes are, well, they're hard to overstate. If the court rules the tariffs are constitutional, it's a positive for the U.S. dollar because it takes huge refund claims off the table.
And U.S. Customs collected something like $200 billion in duties just in 2025.
Exactly. But if they're ruled illegal, all the companies that paid those duties are entitled to get that money back. That's a massive immediate liability for the government.
A potential windfall for importers.
Right. And this uncertainty has led to a critical kind of administrative deadline that all importers need to know about. U.S. Customs has set a mandatory deadline of February 6th for them to register for electronic refunds.
Through the new ACE system, right? Why is this deadline so firm?
ACE is the electronic system they use to process imports. The deadline is firm because after February 6th, they will start issuing paper checks for refunds. If you want your money back quickly, should the ruling go your way, you have to get that electronic account set up now.
Otherwise, you're facing years of bureaucratic delay.
Potentially, yeah.
We're also seeing policy directives aimed at the housing crisis. The president instructed his representatives to buy $200 billion in mortgage bonds.
He explicitly cited Fannie Mae and Freddie Mac's combined $200 billion in cash reserves as the funding source. The idea is to flood the market with liquidity to drive down mortgage rates.
A pretty unconventional use of their reserves.
It is, but the goal is clear. Increase affordability, spark home sales. And he coupled that with an intent to ban large institutional investors from buying up single-family homes.
Why target them? They're a relatively small slice of the overall market, aren't they?
Nationally, yes, only about 2%. But their presence is heavily concentrated in certain Sunbelt cities. In Atlanta, for example, they control about a quarter of the single-family rental market. The thinking is that this density artificially drives up prices for first-time homebuyers.
Let's touch quickly on health and food policy.
Yeah.
The House is expected to vote on extending the Enhanced Affordable Care Act tax credits.
Yes, a 3-year extension. There's strong backing in the House, but it's pretty unlikely to pass the Senate as is. A bipartisan group there is working on a shorter 2-year compromise deal instead.
So still some uncertainty on premium stability.
Definitely. And then we have the new federal dietary recommendations, pushing for higher protein, full-fat dairy, less processed food.
And this is hitting the restaurant industry.
Immediately. Companies aligned with those goals, like Sweet Green and Chipotle, which just debuted a high-protein menu, they're seeing a boost. But restaurant lobbyists are worried the guidelines might just encourage Americans to dine out less overall.
Okay, before we wrap, we have to address these accountability battles in Washington. First, the Epstein files.
A bipartisan group of representatives, including Thomas Massie and Ro Khanna, they've asked a judge to appoint a special master. They are extremely critical of the Department of Justice for missing its December 19th deadline.
They still have millions of documents to review.
Over 2 million. And the representatives are explicitly stating the DOJ cannot be trusted to handle the release without some kind of external oversight.
And then there's the extremely concerning situation in Minnesota, the fatal shooting of Renee Nicole Good by an ICE agent.
The state's Bureau of Criminal Apprehension, the BCA, they've reluctantly withdrawn from the investigation. They say the FBI, at the U.S. Attorney's behest, blocked them from accessing scene evidence and case materials.
So the local investigators are being cut out.
Completely. DHS claims the victim was engaged in domestic terrorism, but the local officials feel they're being shut out of a transparent probe.
Finally, let's close the corporate news with some serious distress in luxury retail. Saks Global, which owns Neiman Marcus and Bergdorf Goodman, is facing liquidation.
They're struggling to line up $1 billion in what's called debtor-in-possession financing, or DIP financing. That's just the cash a company needs to keep the lights on while they try to restructure in Chapter 11 bankruptcy.
And if they can't get that money,
investors are really skeptical they can reorganize. So if they fail to get that funding, they face Chapter 7 liquidation. That means the company stops operating and just sells off all its assets. It's a dire situation for two iconic brands.
So what does this all mean? The key takeaway for you, I think, is that the pace of change and instability we're seeing right now is profoundly political. This isn't just about macro trends. It's driven by direct government intervention.
Exactly. Tariffs, wealth taxes, defense spending, housing policy, all of it fundamentally changes how investors and corporations have to assess risk.
Decisions made by political leaders, whether on something like Greenland or a retroactive tax, are having these immediate market-moving consequences. The volatility you see is the price of this constantly shifting, politically charged landscape.
Which brings us to our final provocative thought for you to consider. We've seen California try to implement a new wealth tax retroactively, and the administration is waiting for the Supreme Court to rule on the legality of existing tariffs that brought in $200 billion last year.
Both of these create massive financial liabilities or windfalls after the fact. So does this growing reliance on retroactive financial policy signal about the future of predictability and stability?
Right. If governments can just keep changing the rules of the game after the play has already started, how do high net worth individuals or major importing businesses actually plan for the long term?
You might want to keep a very close watch on the outcome of that SCOTUS ruling on Friday, because it will be a landmark moment for policy certainty one way or another.